think it's fair to say that by anyone's lights, this is one of the biggest financial frauds in American history.
I didn't knowingly commit fraud. I don't think I committed fraud. I didn't want any of this to happen. I was certainly not nearly as confident as I thought I was.
$26 billion. That's how much the owner of FTX, Sam Bankman-Fried, was worth earlier this year. But fast forward to the present day, and his total net worth is zero. Nothing. In fact, he has been forced to step down as CEO. FTX was once the world's second largest crypto exchange, with endorsements coming from huge stars like Tom Brady, Naomi Osaka, and Steph Curry. But today, they're filing for bankruptcy and can't process any withdrawals at all. So, how exactly does a company fall from a net worth of $32 billion to filing for bankruptcy all in the space of 10 days? Basically, how do you ruin a company? This is a really juicy story, but before we dive in, it's important to note that there are 4 key players here: FTX, Sam Bankman-Fried, Alameda, and Binance. FTX, which stands for Futures Exchange, is a Bahama-based cryptocurrency exchange that was co-founded in 2019 by Sam Bankman-Fried and Gary Wang. They basically allow people to buy and sell crypto assets, trade digital currencies for either money or other digital currencies, and the other way around. Simple enough, right? Well, we'll get to that in a second. Take a look at the man himself, Sam Bankman-Fried, or for short, SBF. He was raised by 2 Stanford law professors as a child and graduated from MIT with a degree in physics and a minor in mathematics, so his background was highly educated. 2017 was the year he started his empire, with the launch of another key player in this issue, Alameda Research. And what does Alameda do? It's a quantitative trading firm trading cryptocurrency between various international markets. SBF made millions with Alameda trading on Bitcoin's price difference between Asia and the US. 2 years later, he launched FTX, which later became a top 3 global exchange. While SBF was at his peak, he was the second biggest donor to the Democratic Party, hosting conferences with Tom Brady and other celebs, and plastering FTX all over cities and arenas. FTX sponsored the Miami Heat's arena in a 19-year, $135 million deal, as well as esports club Team Solomid in a 10-year, $210 million pact. All this publicity for FTX meant one thing: more investors, and they came pouring in from all sides. A $1 billion Series B in July 2021, another $421 million in October 2021, and $400 million more in January 2022. That doesn't include fundraising for FTX US, a separate exchange serving the United States. FTX was riding high, and so did SBF's net worth. He was estimated to have a $26 billion fortune, but SBF was a man that believed in the theory of effective altruism, essentially trying to earn as much as he could through FTX and crypto trading to eventually give it all away and benefit the world. This was why, when the crypto industry experienced a $2 trillion crash in May of 2022, he very publicly stepped in to bail out insolent firms like Voyager Digital and BlockFi, who were basically on the verge of bankruptcy. On a podcast in August, he said that bailing out Voyager Digital was probably $70 million down the drain. Apparently, he didn't expect the funds to be returned. Basically, there's $70 million that we knew we would maybe never see again. He was seen largely as a crypto savior in the crypto community, but turns out his actions weren't as good as they seemed. Behind the scenes, there were reports that he was improperly using FTX customer funds to stem the bleeding at his other firm, Alameda. SBF stated that FTX and Alameda were separate businesses, but reports claimed that they had close financial ties. The purpose of Alameda Research was to act as a liquidity provider on FTX, but CoinDesk published that most of Alameda's holdings were in FTT, a token invented by FTX. The report revealed that Alameda's main investment was in FTT, and it held a position worth $5 billion. This raised a lot of eyebrows across the cryptocurrency industry, because Bankman-Fried claimed that the companies were separate entities, but they weren't. This meant that Alameda was widely exposed to the volatility in FTT, and a fall in FTT's value could damage both businesses, given their shared ownership. But Alameda wasn't the only whale with big FTT holdings. Binance also was. Now, Binance's role in all this is interesting. You could look at them as the unintentional architect of FTT's fall. Binance was an early investor in FTX, and they held a stake in the ownership. However, in 2021, Binance CEO Changpeng Zhao sold his stake in FTX back to Sam Bankman-Fried who paid for it partially with FTT tokens. Fast forward to 2022, and in reaction to the CoinDesk's report on the close relationship between Alameda and FTX, Binance announced on November 6 that it would sell its FTT tokens due to recent revelations, which is a corporate term for both of SBF's companies seem shady, but we would like to manage our risk because of how Luna fell from top to zero. The biggest crypto exchange in the world was selling all of its 23 million FTT tokens, worth about $529 million. What happened next? Zhao effectively kneecapped FTX. FTT's price plummeted and the market panicked. Customers began withdrawing their assets en masse, afraid that it would be yet another fallen crypto company. Unsurprisingly, the FTT token fell by 80% in 2 days. Bankman-Fried tried to reassure investors that their assets were safe, but they were not having it. Customers requested withdrawals worth an estimated $6 billion over 3 days, and FTX scrambled to process these requests. It entered what one would call a liquidity crunch, meaning it lacked the money to fulfill requests. FTT needed liquidity, and they needed it fast. A familiar rival stepped in to save the day, Binance. Since SBF was always the knight in shining armor to smaller crypto companies, it was only fair Binance came in to bail them out. FTX agreed to sell itself to Binance, and it was a problem solved. Binance was in the process of researching FTX's finances when they discovered a massive hole in it. They immediately took a U-turn on the deal when it saw the size of the mess.
From our perspective, the deal did not make sense from a number of fronts. From a financial perspective, it's a big hole.
The company collapsed after eyebrows were raised about the mishandling of customer funds, among other issues. No one was coming to save FTX. Financial collapse became a clear possibility. Bankman-Fried tried to raise billions of dollars in an overnight deal to rescue FTX. But no one was willing to hand over $9.4 billion to save the company that had been accused of mishandling customer funds. In reference to Binance's actions, SBF sent out a tweet saying, "At some point, I might have more to say about a particular sparring partner, but glass houses. So for now, all I'll say is, well played, you won." Following Binance's bailout, FTX suspended any withdrawals and the onboarding of new customers. There was no choice for FTX than to file for bankruptcy. FTX and its affiliated companies, including Alameda Research, filed for bankruptcy protection, and SBF's net worth tanked as a result. Bankman-Fried says he's really sorry for the whole mess, but crypto Twitter isn't having it. Neither are FTX's users. Billions of dollars in customer assets are now trapped within FTX and may be tied up in bankruptcy proceedings for a very long time. The ripple effect is even worse. Various firms are now revealing the extent of their exposure to FTX. Genesis, a trading platform, said that it had $175 million in funds locked up with FTX. Pantera Capital, a crypto hedge fund, told investors that under 3% of its $4.5 billion in assets had been in FTX stock and FTT. Sequoia Capital, a company known for investing in several successful companies, has since written down its $213 million investment in FTX to zero. The damage was widespread in the crypto community, but it wasn't done yet. Just a day after FTX filed for bankruptcy, the firm announced it was investigating unauthorized transactions flowing from its accounts. FTX has been hacked, but exactly how much money is involved is unclear. Some crypto researchers estimated that suspicious transfers of up to $515 million were siphoned from customers' wallets. The hacker continued to drain wallets, with many FTX wallet holders reporting zero balances. He did this for several days using what analysts call on-chain spoofing, and then invested those funds into Ether. However, there has been a controversy about whether FTX was actually hacked or a company member stole the money. FTX moved to minimize the damage by selling the majority of its FTT tokens and told its portfolio companies to do the same. The company began moving all their digital assets to cold storage upon the unauthorized transactions. Bankman-Fried resigned as CEO, with Mr. Ray, a corporate turnaround specialist, replacing him. However, Bankman-Fried was still willing to help with the transaction. SBF and FTX are now under investigation by at least 5 different U.S. regulatory entities: the Securities and Exchange Commission, Department of Justice, Commodity Futures Trading Commission, the Texas State Securities Board, and California's Department of Financial Protection and Innovation. The securities regulator at the Bahamas has also frozen FTX's assets. The company is strongly advising against customer deposits. various civil lawsuits are being filed, and in one of them, Sam Bankman-Fried is named along with several celebrities who have promoted FTX in the past, including Tom Brady, Larry David, Naomi Osaka, Shaquille O'Neal, and Steph Curry. This spells bad news for all previous promoters of FTX. It's estimated that FTX now currently owes $8 billion to more than 100,000 creditors. Some of the sports deals that FTX had entered into are now crumbling. The NBA's Miami Heat and Miami-Dade County decided to terminate their relationship with FTX and will rename the team's arena from FTX Arena. Mercedes also said it would immediately remove FTX logos from its Formula One cars. The future of FTX as a cryptocurrency exchange is in serious jeopardy, but its failure will likely result in the destruction of billions of dollars of wealth and create even more doubt about cryptocurrencies. Withdrawals are currently disabled, and a notice on the FTX website says the company strongly advises against depositing. Could there be a spillover to the rest of crypto? There already is. Since the crisis at FTX began, Bitcoin has plummeted from $20,000 a coin to $16,500, its lowest value since 2020. The cryptocurrency industry has long struggled to convince regulators, investors, and ordinary customers that it is trustworthy. But FTX's collapse might have just made the case for stronger regulation. So, who is the biggest winner in all this? As of today, Zhao has become the #1 player in crypto and ranks among the world's richest with a net worth of $16.4 billion, while Bankman-Fried is no longer a member of the Billionaires Club. His net worth plummeted by 94% in a single day, and he vanished from Bloomberg Billionaires Index overnight.